Right then, let's do a watch list for the indices and gold. We'll throw oil up there as well as a commodity. So the market is in risk on. Equities have gained on the back of the sentiment around the Fed being dovish and some bit of a turn in sentiment regards to um, the European Central Bank being less dovish than prior. So that's given the markets a bit of an uplift. A very decent uplift considering it came all the way down from here at the end of October, breaking the cycle highs. So we've got that correction measured from here up to here. So prospects of an ongoing continuation of that move. That's on the weekly chart, right up through into this potential area of supply. So that's on a longer term outlook. Whether we can get that all in 1 week or even 2 weeks, no idea. I mean, we certainly had that kind of range over the prior 2 weeks. This is the NAS, so there's no reason why it can't. We've got this void in price that we're starting to come into, so perhaps we could have quite a fast move up this week. So if there's nothing to turn sentiment, then no reason why not. On the other hand, uh, the Fed minutes that come out Tuesday might come out more hawkish than expected, and that could put a cap on this rally at quite a sensitive area on the chart, just above that high with the W formation down below, which is a technically bearish reversion pattern that might want to pull the price back in towards the neckline. So a two-sided outlook there, really. Now, just in terms of the day count, come on to a. I'll just mark that level off, that weekly target, as the minus 272. I'll just put that there for now. We're quite way off it, so not really too concerned about it for now. Just want to get rid of these Fibonacci's. And what we'll look at here is the day count. So we've come into a fresh week, and this is a fresh day. We're yet to break Monday's high. We're so far inside. This is Asia, Tokyo. But coming back from where we've come from, had this failed breakout of the week's high. So that was last week's high, pulled back, and we got a lower low. Confirm that as day one, day two, shorts in the market. But we then broke the high of Thursday. So we've got breakout traders pulling this price back up. So we've got bulls stepping in down here at a fresh low. So this was a failed breakout because we broke the high on Friday. So Thursday, Friday, we got day three breakouts, traders, day three breakouts in the market. No, sorry, day two breakouts in the market, day three longs. So we broke out once, twice, day three longs. And we could be in for a fourth day of longs. No reason why not. But essentially, it's the start of a new week. So we just reset it to the first day of longs if we break the high. So we're looking for a break of that high. So I'll just mark that off. We need to break that high to confirm that we are likely, to confirm that the bulls are in charge on the second day of this week, Tuesday. And that then means that we can build a thesis for higher highs to come, front side of the day of the week's trend so far. Okay, so that's the NAS. Other than that, no real bias. We're above last week's high. It's quite important to note, really, that most breakouts fail but it's just timing. The failure is what we're looking for. So at the moment, nothing to suggest that this won't continue in a rising channel. And creep on higher. Quite an important day with the FOMC minutes, so I think we'll be potentially a little bit stagnant ahead of those minutes with a bias to the upside. On the downside, not the downside, we'll get to the down in a moment. We've got the closing price, this void here between the open, so the open and that close on Monday. So there is a bit of a void there that we might come back in to test, fill, maybe dip below the closing price, move on up. Not sure. But once we do break that closing price, I'll be watching the behavior of it and to see whether or not. I mean, if we haven't broken the high and we break the closing price, then that might be significant because it might mean that we're making intentions, regardless if we come up high, to continue lower if we break the closing price first of all. So that's just a theory, and we'll just keep an eye on that. So we'll wait to see which one gets done first. So there's a area of potential support, area of potential resistance. At the moment, we're front side of the trend. If we do break the closing price, then we've got this area of void in the market with that displacement and last week's high as a meanwhile target area on the downside, with Monday's point of control as a potential support, which lines up effectively with that low, which is quite interesting. All right, so that's the NAS. Day two longs bias to the upside until proven otherwise. S&P, similar scenario I should expect. Let's clear up this chart. Let's go to the longer term charts first. Right, we're coming up into this order block area of potential resistance. So we're moving into that. We can mark that high off as well, which guards a move up through these levels. And I'll pop that up here. Excuse me, the bullish cycle high. Right, so if we measure the correction, it comes up into this order block, minus 272. Up in there. So that's a sort of a target area on the upside. It's just a correction measured to the upside. So impulse, correction, continuation up into this target area. Okay, right, I'll mark that minus 272 off, that monthly corrective target there, and then I'll get rid of the Fibonacci's, clear up the chart a bit, and we'll just dim down this potential supply area. Okay. Right. So yesterday's high, we're inside, same scenario as the NASDAQ. Got the closing price to keep an eye on. And we are front side of the bullish trend. And until we break that bullish trend that I'm about to put on, the bias is bullish. Day two longs is the thesis for the day. Exactly the same scenario really as NAS, breakout traders in the market. Day one, day two longs is the thesis. Okay. And we'll go to the Dow. Oh, yeah. Right. So Dow is up into a supply area on the daily charts. We can see that. We know that. So supply area, prospects of moving deeper into it. Target that's there. We've already broken those highs. We can expect perhaps some kind of resistance around here. So we'll just move that up into there and clear the way for prospects of a move up. Okay. And that's on the weekly chart. On the daily chart, same scenario, coming down to nearer term. So plenty of days long, 1, 2, 3, and potentially a fourth day longs in the market. We've got 1, 2, so maybe prospects of 3-day breakouts today. The third day of higher highs, in other words. Respecting perhaps this sort of channel, no idea, but wouldn't be surprised. So we're looking for a break of the high of Monday to confirm that we've got longs that are staying in control, the bulls. Otherwise, we've got the same scenario that we had on the other indexes. Closing price over here and this area as potential target zone on the downside as being last week's highs, that dotted line, that white line. Yesterday's, forget yesterday. So last week's highs and the closing price, as I said, that's already on there, that red line. So if we get below that, then prospects of a move lower. Otherwise, bearish bias. I won't do the Russell. Stick with those three. And now onto gold. We've got the second day of longs in the market. Gold, we've broken Monday's high, failed on the downside, so day one longs, and Tuesday, day two longs. Heading up towards last week's high as a target. Last week's high as a target, round about there. Staying with the bias to the upside. And last month's highs over there as an ultimate target for the week, for this Tuesday, Wednesday. Thrust to the upside, perhaps. Okay, day two longs in the market. Okay, so that'll draw us to, oh no, we'll look at oil as well. We'll finish up with oil. Right, so today's Monday. Monday was breaking out of Friday's high. So we've got a day of breakout traders here. Now we're looking to confirm with a move higher. That'll be 2 days of breakouts in the market. At the moment, we've only got one. But until we significantly break structure, which is the lows of New York, then the bias is bullish. for the oil price on the second day of the week. Day two, day one, day two. Thesis is day two longs. In the market. And we have Wednesday's highs, last week's highs as an upside target coming from the low. Perhaps we're coming up to the other side for the next couple of days ahead. Now, if we were to break the London session lows of Monday, then that puts the trend in jeopardy. And we'll be looking for a move all the way back down through Monday's low. Not sure why that's dotted down there, but Monday's low seems to be over here. So if we fail below here, then the thesis is we're coming down towards Monday's lows and a continuation to the downside.